Hi, welcome to AlgoWays. So in today's video, we are going to discuss a strategy on Nifty and Bank Nifty both, wherein we'll select a strike in the morning to trade for the entire day. Okay, let me explain this on an Excel sheet. So what we will do here at 9:20 in the morning, we will find out the what is the ATM strike. Let us say for Bank Nifty, the ATM strike is say 36,000 at 9:20. So what we will do, let me just explain the logic of the strategy. What I am using is that we will identify the strike at 9:20. We will see its LTP, say suppose 300. Let me just put in right perspective. This is strike at 9:20, and this is premium at 9:20. Okay. So what we will do in this strategy, we have noted down these parameters at 9:20. So whenever this premium of 300 for this strike goes down by 10%. So what will be the trigger? 10% decay from 920 rate. So whenever this 300 rupees premium, which was at 920, goes down by 10%, so that is 300 into 0.9. We sell this particular strike. This is applicable for both call option and put option, CE as well as PE. So we will note down what is the CE of that particular strike, which was ATM at 920, and we will note down the PE also. So suppose PE is at 350. So whenever the CE goes down by 10%, that is 270, we sell the CE. And whenever the PE goes down by 10%, we sell the PE also. So 10% down from 350 is 350 into 0.9. Whenever the PE goes to 315, we do the sell. So these are the entry conditions. We don't have to see any candle, any charts or anything. We don't have to time the entry also, because it will not be a fixed time entries depending upon where the market goes and how fast and at what time the premiums go down by 10% from the 920 premium. It will take entry. It may take entry at 9:21. It may take entry at 10 o'clock, or sometimes it may not take entry at all. But those days will be very less. Anyway, if market also is in range bound also, the decay will happen. So these are the entry conditions. Now, for the exit condition, these are the entry condition. Exit, I have done two scenarios. First scenario is that we keep a stop loss of 25% of sold leg, of sold leg. So 25% of 270. So the stop loss will be 270 into 1.25. So our stop loss will be 337.5, and in this case our stop loss will be so this will be our entry 270. I am taking the example of these premiums. This is CE and this is for PE. So these are our entry levels and these will be our stop losses. You need to remember one thing here, that If we get an entry in CE, it is not necessary that we will get the entry in PE also at the same time or later. Maybe we can have an exit in CE and then may get an entry in PE, or in this particular case of 25% stop loss, it may so happen that our CE entry has come and then market moves up and then PE entry also comes before CE hitting the stop loss of 25%. So at some point of time there could be the two legs open, there could be one leg open, and that in a particular day that only one leg may remain open, second leg may not come at all if the market keeps moving in the same direction. So this is entry and exit condition. This was scenario one for the exit. The second instance what I have done is I have taken a stop loss of 12% of individual legs. So it will be like quick exits also if market reverses. So in this particular case of 12% stop loss, what will happen that most likely than not, we will get an exit from the current leg and then the entry in the new leg will happen. So if CE has got sold first and if market goes up now, so it will happen that the CE will get exit before the PE enters. So in 90-95% of the cases, we will have only one leg open in this scenario. So scenario one, I will name it. This is scenario two. Okay, this is for Bank Nifty. Same is applicable for Nifty as well. So let me just summarize the logic first. At 9:20 a.m., we will see what is the ATM strike. It means where is the Bank Nifty spot. The strikes I am saying spot basis, and we note down the premium of that particular strike at 9:20. So whenever the CE or the PE goes down by 10% from the 9:20 price, we sell that particular strike, either CE or PE, and then we keep a stop loss of 25% legwise in the first scenario, and we keep a stop loss of 12% in the second scenario. So what will happen? What is likely to happen? Let us take example of this 300 CE sold. So if this 300 CE has got sold, so 300 was the 920 rate. Now our sell trigger rate is 270, and our stop loss for this 25% scenario is 337 stop loss. So what will happen if 270 at 270 the call option leg has got sold, and now if market goes up and it hits the stop loss at 337, it will exit the trade. But again, if market goes down to 270, it will again sell the leg, and this process will keep repeating. So we may have 2-3 stop loss during the day in a particular leg, but ultimately the market, the premiums have to go down in one side or the other. So either CE or PE will give us a big move on a particular day, especially on Thursday, because one of the premium has to go down, go to zero. Okay. So in this scenario, also 12% case also, it may have little more trades because the 12% stop loss may reach quickly, and then again re-entry may happen. So we may have 3 to 4 entries a day in a particular leg. So that is the strategy. Now I have coded these two scenarios in a basic platform called Tradetron. So I will just share the backtest report, and then you can also try the same thing. Tradetron में थोड़ा difficult है strategy को करना because Tradetron does not provide a keyword or the facility to record the ATM strike at 920 and to record the ATM the premium of those particular strike. So there has to be some roundabout to be done. I have done using a Python patch in Tradetron for this to identify the 920 strikes and the premium. Okay. So on the second page, I'll just summarize the backtest data. So first I will do for Bank Nifty. I have already done the back test, so I will just open that particular thing. So I will take Bank Nifty first with 25% scenario. This is from April 2020 to August 31. Why I do till August 31 and then skip September 21? Because there on 3rd September or on 4th September, there was a freak trade wherein one strike premium went from 300 rupees to 1900 rupees. So during back testing, if your strategy happens to be trading in that particular strike, it gives you very drastic results, either positive or negative. So I generally skip on Tradetron this September data. So I have done it from April 2020 to August 31st. April 2020 to August 2021. So it is April to April 12 months, and then May, June, July, August, four months. So total 16 months. This is period. ROI. ROI is 281.8, 2,81,800, 281,800. TD is 5.27%. And number of average trades per month is, I have not done the calculation by putting it in Excel, but we can generally see the number of trades is around 100 per month. Hundred trade means 50 entries, 50 exits put together. Okay, and the same data for I have done some other period also, I think. Okay, it's not there. This was for 12% scenario. So 25% scenario. B and 25%. Same way, B Bank Nifty with 12%. Let me see what is the data I have for 12% case. Yes. Okay, 12% for the same period, but one extra month. I have taken September as a chance. That particular strike did not come into this, so it will be 17 months. So 175, 258, 100. This will be 17 months. This will be till September. And this will be 258, 100. 258, 100. And the DD is 4.69%. Number of trades are slightly higher in this case because we have a less stop loss. So I can see we can take around 150 trades on average. Okay. Similarly, let us take Nifty also. I think I have for this 12% scenario October 21 to June 22 also. Let me just see the data. This is October 21. That is 3 months of 21 to July. 7 months of this. So 10 months data we have here. This is 10 months. And PNL is 103,200, 5.23% is DD. 103,200, 5.23% is your uh, drawdown. Number of trades will be again around 150 average per month. I don't have data for this October to uh, July for 25% scenario because error kept coming in this particular backtest and a straight line data comes. So you can do it at your end as well. Nifty 25%. Nifty 25%. Okay. So this is 165 600 and the period is again April 2020 to August 21. April 2020 to August 21, 16 months. ROI is 165 500. 165 500. The drawdown is 4.25%, and average number of trades is it's again 100. So some are above 100, some are below 100. So we will take it average as 100. That is right. And this particular period also we have data for 25% scenario. Here we go. So in this period of 10 months, we have 95 500 and 7.17. 95 500 and 7.17%. And number of trades is again 100. Now the last scenario is that we will take for Nifty 12%, 12%. So period is again April 2020 to August 2021, and the outcome is 179 400. 179 400. DD is 3.33%, and number of trades is okay 150 average. And for the next period, what we are discussing here is October to July, that is 10 months. 109 100 8.62. 109 100 8.62%. Again 150. So this is the summary of the backtest of this particular logic on both the indices, Nifty as well as Bank Nifty. You can try with different stop loss as well. Okay, this is not that there is any hard and fast rule. But I have done that. I have tried to make it exit very quickly in case of this is the reversal in one case, and then in second case where I have kept 25% stop loss to give it some space to work with, so that it does not get exit a number of times. That is why the number of trades in 25% scenario is less. So just a quick mathematics on these numbers. So let me see. Let us say that 16 months we have a return of 2,81,800. So per month we have this divided by 16, around 17,000, and then expenses we have. I am taking 12 rupees per trade as the expense, in considering 5 to 6 rupees per lot brokerage and some other expenses. So 12 rupees still on higher side. A lot of brokers are providing a very competitive brokerage nowadays. So 100 into 12, this will be our expenses. So net will be uh, this minus this. Our margin is 1.75 lakhs here. So percentage ROI. Okay, let us reduce 20% against slippages also. So after slippages, this into 0.80. This much. So percentage ROI on the margin deployed, this divided by margin deployment will be 1,75,000 for Bank Nifty, and we can, if we do hedges, we can do it in 1 lakh also. But I am considering the full margin. So this is the return for 25%. Yes, 25% case of Bank Nifty. Let us go to 12% scenario. This will be divided by 10 months. So considering a very high slippages, considering a high, reasonably okay expenses, that means we are reducing all the adversities from the total P&L. We are comfortably placed with 6 to 7% kind of net return after considering a slippage also. This is for Nifty. So Nifty 16 and 10 expenses. Okay, so here we will have margin as 125. So this is the result. Similarly, we can take for 12% scenario as well. Again, same thing. 6%, 5.8. So these are the net returns. It is not something like a back test was done, took the gross figure divided by number of months and calculated the percentage. We are reducing all the expenses. We are reducing a 20% slippage from the profit. So that is a very worst case scenario. So all the adversities have been taken into consideration, and then only this ROI has been arrived at. So which is a reasonable net level return every month. So I think I have completed the logic as well as the calculations which I have done on the back testing. So individuals can try now to uh, try the various other scenarios also. It is not that 15 or 25% will work better. It can be 10%, 40%, even 50%, 20%, whatever suits to your trading style basically, and try it out. Coding in Tradetron is a bit challenge. The reason I told that Tradetron does not allow us to record the strike and the premium at a particular specific time. In this case, at 9:20. So I'll keep both the strategies link in the description box so that you can deploy and see and code it. If somebody wants the help, can contact me for template or the strategy coding for this particular strategy. So that is it from me today. Uh, in the next video, we will take up another simple but effective strategy. Till then, I'll request you to subscribe the channel, press the bell icon as well if you want to get the notification for the next videos. And if the content is good and effort are genuine, you are requested to like the channel as well. Thank you very much. Thank you for your time.